these people back. But here comes the money printer. Here comes the stimulus. Here comes the Treasury General account. Here comes the catalyst for what could be the rally into the end of the year, going back to 1927. Yes, you're going to hear a lot about 1927. Everyone, everywhere is about to be an expert on end of year rallies into third Friday of December. We're just going to let it be because, again, we'll talk about momentum. We'll talk about the runner. We have a special guest in 3 minutes. We'll talk about all this stimulus, but we did it, everybody. Look, I mean, come on. You just celebrate everything. I think that's a hot dog rocket. I just basically asked ChatGPT, show me a celebration.
Sorry, I'm not muted.
Show me a celebration of the United States government reopening, and this is what it came up with. Yep. So I mean, there's a Uncle Sam holding Starbucks. You got dollar signs. You got some Roman candles and Roman temples. Statue of Liberty, obviously. I think that's the Stay Puft Marshmallow Man. This will be my album cover when I get it. Did someone say $2,000 tariff checks for all? I have not seen that news. I legitimately, I was at an Irish festival for the bulk of the weekend. I feel fine, but I checked out. If they're going to give us all $2,000, we're buying the dip. This is outrageous. This is outrageous. So yes, new all-time highs. Let's get into it. Obviously, Brandon, I'm trying to let you in. You're in. Okay, I think somebody took care of that. But real quick, before we dive into that, silver up, palladium up, Bitcoin up. Look, everything that is momentum driven, everything that is liquidity driven is up this morning. So what do? Sell put spreads on copper and gold and silver and buy BTBT because this is probably going back to 4 now. Again, we had a trade that went a little bit sideways on BTBT. We bought the stock at like 350. We sold calls at 350 to unwind a position. Now it's just this will be like $4 or $5 if momentum returns to this market pretty quickly. So, Secret Agent Charlie. We're not going to get to the runner just yet because, once again, we are a reminder that, look, this is not a trap day. This is one of those days where all of a sudden everybody all at once becomes an expert in something. So don't be shocked to see all of anything that anyone was trying to unwind, anything that anybody was trying to sell. On Friday, we had a major pivot shift that transpired at around 12 o'clock that day. Now, again, don't go to the post office. Never go to the post office because you will miss an opportunity to make 300% on your money when we had that crossover on NVIDIA right here at 180 and finished the day up at 188. But the continuation of this, again, this has gone from 180 to now 194 in 2 days. What are we paying very close attention to? What are we looking to trade? The NVDL, the long ETF. And even if we are only in it for 2 to 3 days, we are looking for a bounce back toward that 105 to 110 level. It is 8:50, and we have a very special guest today. Where is he? There he is. Brandon, it has got to be, what, 5:50 in the morning where you are? 6:50. Are you Mountain Time?
6:50, yeah.
You are a absolute trooper. Thank you so much for getting up way earlier than I ever would. If you hosted a show at this time and you said, can you come on at 6:50? I would say, no, thank you. So I appreciate you taking the time to join me this morning. Take me through what your expectations are now that, we're talking about a government reopening. We came off this bottom Friday, and now everybody everywhere got bullish on Sunday.
Yeah, I mean, well, you saw the reversal kind of happen intraday on Friday, right? I mean, like we were, my son had a baseball tournament in St. George, so I was kind of out, but I was checking the markets during the day, and there was a big trade on silver on Friday, and at the February 63 calls. So people are trying to get risk on. They've tried it a few times, but like, what does this really change anything? I mean, yes, we're reopening the government. I guess, yes, banks will get some money, but they've been getting it anyway, right? They've been tapping, liquidity facilities and all that stuff the last couple weeks, just trying to stopgap measure, but there's still no guarantee there's going to be a bill right?
Right.
We get it out of committee with the cloture vote. And why didn't we just hurry and pass it? We didn't. So potentially a vote this afternoon or this morning sometime, 11 a.m. Eastern. So yeah, we might be getting ahead of ourselves, but we're definitely seeing, I mean, a lot of going back to those kind of that short squeeze mindset here, at least pre-market.
I got a little bit of a flashback to something. 2008, when they needed to pass a bailout bill and they
Mhm.
didn't pass it, and everybody on CNBC is going, they didn't pass the bill, and then all of a sudden the
Yeah.
market just completely imploded. So, would you be cautious about that? Would you be concerned that that the resumption of that down cycle, that lower highs, lower lows could resume if we don't get that?
Well, I guess it depends on your thesis, right? If your
Mhm.
thesis is the market's great, this bill, this spending bill just got in the way, then I guess yeah, you're celebrating the passage. And you think, oh, the market's cheap, we're going to go higher, and you buy, you take on risk. But if your thought process of the market was already weakening before this, right? Which it has been. It really became a one stock market in terms of Nvidia,
Mhm.
and even its ecosystem was starting to really drag in the last month before the shutdown. Really, I mean, as the shutdown kind of took off here, but I guess it depends on your thesis. But at least for
Sure.
today, yeah, we're probably going to see those stocks at the open start to get lifted generally. So you may have had been involved on Friday before it's, just anticipating it. Because if it doesn't pass, then maybe we start to sag back again. I would say you hate to have everything based on just news, right? Like
Right.
this, where it's like
But
it's the fickle finger, right?
Right, but you're not a person who anticipates. You look at cold hard data. Friday we had a rebound. We had this move come right off of 1210. Was there anything on Friday that stood out to you that suggested maybe this was going to happen this weekend?
Well, I mean, you kind of felt like, hey, the election was over, right? That
Mm.
that some progress should be made. When we might see people push across the line. I mean, you had Tim Kaine, Senator Kaine from Virginia, basically say, "Yeah, I was focused on the election. I wasn't really aware." Of course, he's not telling the truth, but I really wasn't aware of like how entrenched the Democrats were on this, right?
Right.
Yeah, right. You're trying to get points here, right? This all it comes down to.
Sure.
You're crossing the line, saying, "Well, I didn't know." Well, look, I mean, and look, I mean, we're not going to see the 1.5 trillion package the Democrats are asking for. The Affordable Care Act is a disaster that's been supported by both parties. Okay, so it's like nobody really wants to do anything on it. The insurance companies do make a tremendous amount of money on it. I mean, United Healthcare loved the passage. I got lambasted when the Affordable Care Act passed back in 2010 by my clients of TD Ameritrade at the time, because I'd say that. I mean, United Healthcare loves it.
Yep.
They're getting out from under all these legacy plans, right? That they have. Everyone's gonna have to shift to the new plan and the new structure that totally benefits the insurance companies. It eliminates marginal pricing, and also we're gonna rejigger how Medicare pays to be in alignment with Medicaid, which Medicaid was paying below marginal cost.
Mhm.
All this stuff, right? But we had two Republican senators that supported similar bills, the Healthy
Right.
Americans, and also the Republican compromise back in the 90s. Nobody wants this to go away, right? Unless the Republicans have entirely shifted. And I think that we have certainly their constituency that wants them to stay intransigent. But you think John Thune doesn't want to pass a big spending bill? Of course he does, right?
Right. Right.
I'm like, so all it's going to take is maybe a little more time. Somebody's going to break. And but anyway, but we're seeing the selling in the bond market yesterday, though.
Mhm. On top of that, you've also seen this morning, they're blaming rate cut expectations, but gold's back at a 2-week high, silver's
Mhm.
back near $50, copper
Yeah.
continues to run. So the metals, the monetary inflation thesis is continuing to hold. What are you seeing in the metals right now that has interest of you for you?
Yeah, I mean, so for example, I mean, last week you had buying of FCX
Mhm.
calls, you're buying gold, you're buying silver, a big trade on again on Friday, 22,000 contracts, the Feb 2063 calls. So again, I mean, you're seeing that, look, at the end of the day, gold has outperformed Nvidia, right? Gold has
Mhm.
outperformed the mark. Yes, we saw a recent pullback. We've seen a little bit of deflation of that paper trade because the futures market is a paper gold trade. And when that leverage, when it gets delevered again, you're raising margin. yeah, it's going to come off. It didn't come off a ton though,
Right.
right? I mean, it came off hard, but it wasn't as much as you might have thought. And so, yeah, we're seeing them wade right back in the waters again. And the idea is that I said this 2 weeks ago, like hedge, buy NVIDIA and buy gold. What else is there?
Would the reopening of the government be bullish or bearish for the U.S. dollar?
Well, I mean, again, it's going to be bearish, right? I
Mhm.
mean, so the idea being is that if we're going to increase spending, Bissent basically said last week we're going to have to borrow more money than we anticipated. And then Trump saying, hey, we're going to give $2,000 checks. Wait, no, not checks, maybe tax breaks. We're walking
Right.
it back, right? So, I mean, the reality is nobody really wants to cut spending,
Mhm.
right? I mean, at the end of the day, nobody, and even if you thought that Trump did, for example, Congress doesn't,
Right.
right? So at the end of the
Right.
day, nothing is going to get done on spending.
Yep.
And now for some, we roll back tariffs. There's a revenue source that's coming in. Well, let's try and get the money out so we don't have to give it back, right? So
Yep.
I don't know. Like this is just a crazy circumstance, but the selling of the bond market to me is reflective of inflationary pressures, at least temporarily. That generally leads to a weaker dollar, generally leads to higher metals prices, especially gold. And you would probably expect gold to outperform the S&P 500. Maybe not today because we might
Yep.
get a bounce back. But if we see this inflationary stance continue, you probably expect gold to continue to outperform the S&P 500 in the coming weeks to months as we grind to a halt. I mean,
You
because
brought, yeah,
economically we're suffering,
yeah,
right? I'm like, we're
yeah.
not doing well.
No, and you brought up a great point about the spending thing. If you go back and you analyze where we were a year ago with Doge, nobody liked Doge. Like all of a
No,
sudden, he became public. Must became public enemy number one. Why? Because he's going after the spending not of one person,
right?
not of 10 people, of everyone, of
Yeah.
every senator. So what do you think's going to happen? Well, I mean, at least it wasn't Roman times, but you see the point here that the all roads point toward more debasement, more capital expenditures, more spending, $50 trillion in debt within the next 5 to 10 years. You got a special event coming up today, 2 o'clock. What are you focusing on? And I know that this is the type of environment with a lot of activity, with a lot of action. You're paying very close attention to what is going on in the option volume market.
Yeah, so we're going to show some big trades that have occurred and continue to occur. We're going to obviously we're going to show you the Ghost Print surveillance console. Again, we're trying to basically put the biggest trades in front of you every single day in the options
Mhm.
market with one click. So the idea is we have a block trade setting. You click on it, you're going to see the biggest option trades in the market every single day, and you also have the ability to see other stuff as well. We have the squeeze bar indicator on that as well to see the potential squeeze, which today, if it looks like what we're seeing pre-market, we may see a short squeeze for a week
Yeah.
or two. How are you going to ride that? How are you going to find the right companies that are seeing the option activity driving the gamma squeeze, which fuels the short squeeze? And that's a big premise. And we have a special event coming up on the 21st of November. We're going to walk through understanding the squeeze in the market, the gamma to short squeeze, how to trade it, why options are cheap on these stocks. And so again, that's an event coming up in almost 2 weeks on the 21st. And again, obviously we're gonna be presenting that a little bit today as well.
I look forward to do at that as well, Brandon, and paying very close attention this morning to Plug Power,
Yeah.
28% short float, 9.5% move. I mean, these are the types of stocks that they move very quickly. You have this big news event, so do me a favor, everybody, click the link, get in the room with Brandon. 2 o'clock today. I'll give you the last word to wrap it up.
Yeah, just be prepared for anything, right? This is a market where you probably have a bit more cash,
Mhm.
right? You take your swings to the bullish side, to the bearish side. Right now, we're looking at the bullish side. So if we see a rally in the coming week or two or three, you better be prepared to find long opportunities. And again, using the squeeze bar coupled with the gamma squeeze, seeing the option activity, those two together can create explosive upward moves. And this is going to get you ahead of the game.
Awesome. Brandon, thanks so much for getting up this morning and joining
Yeah.
us. I will catch up with you in a bit today. Everybody, again, 2 o'clock today. Click the link in the chat. We will catch up with Brandon today, 2 o'clock.
All
Have a
right.
great
Thanks,
day, my
Garrett.
friend. Take care.
Have a good one. See you, folks.
All right, everybody. So as we dig deeper into this, I just talked about this a moment ago. Look at this guy. Oof. Well, I'm going to go long plug this morning, largely because they mentioned AI and data centers, and it's a high short, and we're pushing back above our 50-day, 20-day, 8-day EMA. Buying right at the 289 level, setting my stop right back at the 270 level. That's how we'd get it going, Mr. Charlie, for Del Rana. He knows what's going on. We didn't talk about momentum. Let's do that real quick. This is one of those days where you kind of have to scrap the data set for the first 30 minutes. I will be back with a update at around 10 o'clock on this. Russell is improving. That's where I really want to keep my focus, is in the Russell today. Watching the IWM, watching the TNA. Ooh, that sounds dirty. All right, breaking back above these key moving averages. That may have very well been a bottom on Friday, and we have seen this happen a couple of times right along the way. That August 1st period, that's that October sell-off. Now we came down here, pushing back above here. I am going to likely do some spreads today on the IWM, keeping my anchor somewhere around the 250 level, if that's an option, or 243, and then selling back up at the 250 level. If we roll over, if this is all a head fake, which is entirely possible, Brandon just explained that, you want to keep a tight stop. But I do keep saying this over and over again. You want to take shots. You don't like to be short over the weekend. That's why we got out of our SH spread, or forgive me, call over at the NVIDIA 4D. We took our profits, and now the question is, what does the SPY do? Do we really start to take off once again? Well, momentum is yellow. We are improving. I am expecting a big behavioral day where retail comes screaming off the sideline. What are we looking at? Well, Joby, G-O-B-Y. What do you do? Joby Aviation. Now, I have done very well doing something very simple with this name, selling put spreads. It's not that complicated. You don't have to do much. You just kind of find a place where you want to own this stock. And you do want to own the stock. You should want to own the stock. This is a very good business. Now, what are we looking for? We are looking for something that delivers an 80% probability of profit, about a 20% return, and an annualized return of roughly 100%. Now, we're not going to go long in the traditional sense. We're not going to buy calls. Instead, what we're looking to do is going out to December and selling a spread at a level that I would be comfortable owning the stock. Well, here's the beautiful thing. If you can get this filled today, if you buy the $10 put for December 19th and you sell the 12, that will present you with an option spread that delivers a 20% return on risk. Okay. So again, buying the 10, selling the 12. You're still well below these moving averages. 84% probability of profit, 21.2% max return on risk. Break even is 1165. And once again, pushing back above these key moving averages. If the stock sells off, if it pulls back, and this is the kind of the nice thing about something like this, if it pulls back that $13 level, if it gets down there, you're really just looking at roughly a 10 to 13% loss if you have to buy the contract back. So nice pop today, looking to sell the spread, maybe because of the math, maybe going with the 13.11 to ensure that you're able to get that 80% probability of profit and that 20 as well. So I didn't see that. We added 67 cents. Looking at Friday's spread numbers, probably want to do the 13.11, forgive me, for December 13th. VG, couldn't tell you what they do till I look it up. Venture Global, Energy Gas and Midstream. All right, little VG guy. What do you do, fella? $22 billion with an enterprise value of $55 billion. So they've got some debt issues, if you didn't know that already. But actually a pretty attractive little chart here and a big move down out of October, 14 down to 9. A little bit of momentum here. This missed analyst expectations. Nobody happy about that. But it's up 13%. So you do the math. You figure it out. You try to explain to your children how the markets are rational. Don't. Just give them scissors and let them run around. VG, I like this just as a bid. This is a tough one. Yikes. Instead, what I'll be doing instead is I'm going to look for this to pull down to my 3-minute chart. I'm going to look and see how this behaves in the first 20, 30 minutes of the day. If it sells off, watching that orange line, that is the 8-minute adjusted, that is the 24-minute chart. This is the 60-minute line. I said chart. I should have said line. Don't listen to me. 2460, right? So what we're looking for is an upward move. We're looking for this line to dip and then bring it higher. And when it comes, buy it, use the red line as your stop, use the orange line as your exit. And the way that this is behaving today, you could see a move from like 820 up to 940 or 940 down to 810. All we're really focusing on is utilizing these lines for the purposes of momentum. Sony, I don't really get up in the morning saying to myself, I really need to own a Chinese consumer electronics company that was relevant in the 1980s. But I will say this, you have that nice little move right there, that 15-minute chart coming out of oversold like we have, and you've got this crossover. Now, this is the 120. That's a 2-hour line on the orange. And now you have the 20 with 15 is a 5-hour chart. The 2 5-hourly lines. And what you're specifically looking for is just continuation of momentum. So we stay at the money or in the money at the 27.50 or the $27 line. And we sell out of the money and we just play defense. Defense. This is a very nice looking chart. This is a nice possible pop. Maybe something takes us back up to that $28 level. But you could do a lot, or forgive me, not 28, 28.50 level. You could do a lot with 50 cents on a day like today. And I'm not talking about 50 Cent. Curtis Jackson. You can't do a lot with Curtis Jackson. RYN. If I can't do it, homie, it can't be done. If you got that reference, you lived next door to me in my fraternity in 2005. Here is Ryanair. Literally, this guy played that album all day. All day. Magic Stick. All right, Ryanair. Good company. Great company. One of the best. What do? Well, they make trees. You think I'm kidding? Yeah, that's it. Just making some trees. Not a big deal. Forest Products, Timberland Management, seeing some weakness on that 15-minute chart. Now, I guess we've bounced back a little bit. This hit our line for bearish stocks, and I'm not seeing it. So scratch that one today. Look, if this came up on our negative signals, then look for a possible sell-off because everything looks good for the moment. There is a nice little curve right there. I like that. Move back to 25. If this breaks back under 23, you're going back to 21. Not sure how that hit our list. I'm not going to complain. I will not blame anyone for my oversight. 15-minute chart on Lucid, continuing to try to find some level of strength. Look, everything, all signs point to more monetary inflation. Anything that's negative is probably going to end up spiking today. This is up 1.6%. Daily chart coming off that 8-minute. We have to break above that 1878 level here. But short duration, if you buy at the 17 level, look to sell up at the 18 level. That's one way to potentially trade this. This is a tough chart. I think it's just the point that we're pointing out that this is in no man's land. You can also trade this just based on that that 820 EMA adjusted that we talk about, looking to trade into Friday's close with options. BBWI, that is not Build-A-Bear. Wish it were. It's Bath and Body Works. It's a company that I don't understand why it still exists, but it does. And it is weak, right? We're weak here. We're weak on that 15-minute. If we break under that 2276, we're moving lower. But surprisingly, I would not be shocked to see this in its continuation. Remember, we've been in this period of lower highs, lower lows with Bath and Body Works. We're down near these lows. We're down near oversold. We've seen some pop. This could make a move back to its 20-day moving average of 24.78. So I'm going to have a talk with myself about my fades. And then what's the stuff that is an obvious buy? Well, NVIDIA is going to lever back up. We already know that's going to happen. So just go with NVDL, Granite shares. This is a kind of a, this is almost too easy. So long as this stays above that 97.64 level, I would stay long this today. In addition to that, looking for a move toward all-time highs. This is the stock where all of the leverage in the world is. So if we're reopening the economy, if the Treasury General account is going to be drawn from, and we're talking $250 billion, rehypothecation will pick up. We're seeing, again, the Fed is doing what the Fed does. It is enabling. It's through the repo market and enabling through the SRF. Friday seemed to be the low, everybody. I hate to say it. I'd love to be bearish, but I've learned my lesson way too many times. Here's the cartoon that I want to buy back into, BTBT. It's all back on the table. Look, if we're going to pump from the Treasury General account, if we're going to support, if we're going to reopen, if we reopen, we have to reopen. But the reality is this: Bitcoin will go back to an all-time high. This is the whole idea. It's this very simple concept. And interestingly enough, the insiders did not back this up because at the time they didn't know. So we'll see in the next 24 hours if insider buying picks up. And if insider buying does pick up, and I think it will, that is going to be very, very, very bullish for the market. Now, I don't say it because I am a cheerleader for bullishness. I'm not. I am constantly skeptical. I'm the most defensive trader you're ever going to meet in your life. But as the shutdown nears an end, this idea of market relief kicks up. And if my signal, it's not green yet, I expect it will go positive either today or tomorrow if this resolution happens. This reduces policy risk. It supports the Q4 rally potential. It leads money back into risk assets. There was a hell of a statistic that I read this weekend, and I want to pull this because I want to tell everybody where we actually are. This is one of those things where you have to go, wait a minute. I thought the stock market was meant to do this. This is from Michael Howe, who I quote all the time, November 9th. And I want you to listen to this. I really want you to hear this. This is unbelievable. Why is repo so important? He notes. As a quick sidebar, markets have radically changed in character away from the academic textbook ideal. Here we go. Essentially, financial markets serve three types of investors: asset allocators, who arbitrage value. That means somebody buys a company, they really like it, they say, we believe that this company will continue to grow, therefore its stock will go up over long term. Right? I'm going to buy this stock for $20. I'm going to hold it for 5 years. And by the time that I'm done, it'll be at $50. Okay. The second group are called leveraged investors. And this is how he defines that. They play momentum through futures and derivative structures and rely heavily on collateralized repo borrowing. They're taking the stock, they're taking it back to the repo market. They're borrowing money. They're buying more of the stock. They're taking it back to the repo market. They're borrowing more money, and they're leveraging. Then the third group, passive investors. These are your ETFs. These are your mutual funds. They use broad indices. And remember, we talked about how there are almost 1,000 ETFs that just track the S&P 500, which means if they're tracking the S&P 500, they're replicating the S&P 500. If the NVIDIA weight is 9% of the S&P 500, I think it's 7.5. So if it's 7.5, what they're then doing is they are making sure that their pool of money is 7.5. Okay, now, here's where it gets interesting. They will focus on target dates and trackers intuitively, back in the 1990s, the number one form of investor were the asset allocators, the people who bought at 20 bucks trying to get a stock to go to 50. He argued that at that time, it was 80% of the market were those individuals, with leveraged hedge funds and CTAs responsible for about 10 to 15% of the net buying. The pension and the insurance funds, okay, passive was around 5 to 10%. ETFs, they had just started in the 1990s. The very first ETF was the SPY in 1993. Here's where it gets interesting. Okay, passive investing was 5 to 10% in the mid 1990s. The market allocators were 80%, and the hedge funds, the leveraged hedge funds, were 10 to 15%. Today, passive ETFs are 50%. That eliminates price discovery because they're buying these stocks. They don't care what they do. And a lot of ETFs will actually lend out the stocks to be shorted. Pension funds and insurance fund, who did most of the value arbitrage, have shrunk to barely 20% of the market, leaving leveraged players to 30 to 33%. That right there teaches you everything you need to know about how this market operates. And it tells you that this leverage will pick back up if the capital comes back in, because once again, the Fed is providing as much plumbing as necessary to ensure that the repo market doesn't implode. And then it just provides further validation to this. This is the FNGD. And once again, this is all that leverage, that 33% of the market that is leverage. This is the stuff that when this is breaking out, it's unwinding. Well, what has happened? The FNGD has broken back under its 20 and under its 8-day EMA. That crisis for right now is over. So what I want to point out to you this morning is that what you may have thought about the financial system back in the 1990s is not what we have today. Leverage is more important than ever. We have gone from 10% of the market to 33%, and that is an ample amount of money. And then all of that passive investment providing support. This is how you end up in an environment where the Buffett indicator, the equity market by GDP, it doesn't matter because leverage is the story of the day. We are moving now into the possibility of a melt up into the end of the year. I'm going to watch the FNGD. If we break back above that 20 and then 50 day, that's where I will be short. And I reserve the right to change my mind over a weekend pretty aggressively, simply by looking at the way that momentum and fear has shifted. Right now, sector rotation, energy, industrials, financials may outperform growth tech, the XLE, the XLI, the XLF, and the IWM. The Russell is your gauge right now. If that Russell holds above that 20-day EMA, look for continuation. The pressure could be still on tech. It's not like Michael Burry's going away. But look back to the cyclicals. Look back of all of the stocks in the world, which is like the comedy of it all. Look at the cruise lines. That's where the momentum operates. If you're going to take a shot right now, if you think that the government reopening is going to be bullish for the market, CCL will be at 34 by the end of the year. Doesn't matter if anybody's going on a cruise. All that matters is that momentum is returning back to the market. Capital is flowing back into the market. Palantir, NVIDIA, this is a buy the dip type of environment. But you have to keep tight stops. Brandon was absolutely right. This could be a head fake. But if you're following the technicals, if you're doing what you need, if you're looking at the 8-day and the 20-day EMA adjusted down to a 3-minute chart, you could do very well. Global risk on trade resumes. Global equities, the FX, the commodities. Remember, China is still printing. China is still providing ample support to its financial system. That's bullish for copper. It's bullish for metals. And I'm going to tell you right now, you don't have to go long calls. You don't have to go out of the money. This is an environment where, again, with this period where we just saw all this consolidation in gold and chop. Remember, You could sell put spreads to the downside, have an 80% probability of profit, a 20% return. You don't have to be greedy. Look to just beat the S&P 500. You can do that. It's 9:21. Don is coming up. He is not going to put on Van Halen today, much to my disappointment. And if he does, may I suggest Panama? I will be back later today, as I am at 3 o'clock. I hope everybody has a great trading day. If you have questions for me, support at TheoTrade.com. Put Garrett in the subject line. I will be back with a couple of trades in a little bit for my friends over at the NVIDIA 4D. I hope you all have a great trading day. Thank you. You could be doing so many other things at 8:45 in the morning, and I am perpetually humbled that you join me on a Monday morning. Thanks, everybody.